Alright, so today I'm giving you everything I know about price action. We'll go through strategies for beginners, things you can apply right away. Get yourself a cup of coffee. It's going to be a long video today. And we'll get that right in. So today I'm going to alternate between the whiteboard that we have over here and the charts to show you some strategies you can use for price action only. I'm going to show you exactly how it works out, step by step, all the details that you need to know. First, we're going to cover reversals. So how to trade reversals like a pro with only price action. I've been doing this for almost 10 years now. Then we'll talk about the pullbacks, how to trade pullbacks like a pro, things you can do also to make this easier. Then we'll finish with breakouts, how to trade breakouts easily with price action only. Okay, we want to spot, of course, the reliable ones. We don't want to be stepped out too often with these because there's quite a lot of fake outs out there. And at the very end, I'm going to give you some extra tips for trading price action, things you can implement, whatever style you trade, that will make a big difference in your results. We'll go through these at the end because first you need to understand these other principles first, reversals. Now, the thing about reversals is that they should only be traded in a sideways market. If you want to know the easiest way to blow up your account in trading is to sell when prices like reaching an all-time high, sell at the top, buy at the bottom. This is the easiest way to blow up your account because you're kind of not trading at an optimal context. You're trading in the wrong context. So what you want to do first, you want to make sure that the price is in the sideways market, going back and forth between different levels. We'll go on the chart in just a second, so be patient. But key thing here is we want to trade these only in sideways market, not try to cash the top, cash the bottom. This never works well. So let's actually go on the chart and figure this out. One of the pairs has been trending for quite a while now is USD CAD. So you can see here, it doesn't look that way so much, but if you zoom out a little bit, the price has been ranging between levels for quite a while. So at the top, we have this level over here, which is 1.38, 1.39, roughly around this level. It's been going up and down between these levels for quite a while. Now, knowing this, well, of course, you know how it works. All the people I need to have told you before, you look to sell toward the top. Like we say, we don't want to sell the top and buy the bottom, but we can only do it if it's going to be in the sideways market because these are levels, okay, over here and over here, that actually are reliable to look for sell trades. We had an example here just a few days ago where we had a big news event, push price up with making a nice wick, and then price went right back down just after this, right? So this is a good example of price can sometimes work well with these levels, even with the news. So that's a very good example of levels that we can use for getting in these reversals with price action only, which is kind of cool. Now, one thing we need to know if you want to use price action correctly with this is when price gets to these levels, ideally look at the levels on a high time frame. I'm using here a daily chart. We can look at these levels on any time frame you want. It could be a weekly chart if you want to, if you are trading like lower time frame. If you are trading higher time frames like daily chart, go look at it on the weekly chart. If you're trading a forward chart, maybe weekly chart is good too. If you're trading like a 1 hour chart, which used to be my preferred way to do it before, I'll look at these zones here on my daily chart. And I have a good idea of where price is compared to where we can look for trades. And that's kind of cool, right? So here we'll right away look at what levels we have when price reversed in the past. I will go and I will add a new level over here because you've seen just recently, we had price here touch, came back up and came back to retest again. And that's a good area to look for, in this case, a buy trade, or if we're to go and let's say we're to break below here, then we'll look for a sell trade over here. Right? That's the idea here. We'll get to cover pullback here in just a minute, but for now, between these levels, back and forth, back and forth, back and forth, these are reversals. They're very reliable if we spot them right with price action. So how do we actually spot a reversal trade correctly in the market? This is when you got to start to learn a few of these candlestick patterns, or at least these reversal patterns that help us spot better reversals. I found here this infographic online, not mine at all. I don't want to take credit for this. I found this on Google. I thought it was pretty accurate, pretty reliable. So we'll use this one for now, but you can always find the one that you like, use it, and kind of make it your own too. Some of these patterns here, I'm not going to like them. Some I will like them more. So you can pick the one you like and go with them. Here it shows us in details what the patterns are. So we have here at the top bullish, right, and bearish. These are signs of bullish and bearish price action. Now reversals are the ones you want to use for when price reverses. Continuation or when price goes in your favor. So that will mean, okay, we see this, boom, 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 3 candlestick up, 1 candlestick down. This is a good sign to look for a long trade, a continuation within the move. It might sound counterintuitive here, but this is actually a really good setup because the buyers had momentum, went up 1, 2, 3 times. The sellers took it down. Now you can say, well, that's an engulfing candle, price will go back down. But actually it's the sellers are getting exhausted. They take profit, market goes down quickly, then right after it will rally back and go up from there. Okay, it's like a opposite sign of an engulfing candle. It's actually the sellers get exhausted and then the buyers go back in and bring back the market up. Same thing over here. Okay, the buyers are taking profit, boom, boom, boom. All the buyers are getting in, price goes up, they're exhausted, they move, and then the sellers take it back down from there. I've seen this play out a lot in the market. Now, personally, I'm a big fan of these engulfing candles. These work really well for me. So bullish engulfing, bearish engulfing candles, these are ones I like. Tweezers can work in the right context when you have these big wicks here below. So price is kind of making these small candlesticks sometimes, very small, with these big wicks at the bottom, and sometimes even like at the top. And then you have a second one, and then you have a big wick, then you have a third one, then you have a big wick, and then eventually price goes up in your favor. These are good, right? I like these ones too, but they need to be working fine for this. Evening Star, I'm also a good fan of this, kind of like similar to engulfing candles. They also work the same, so Morning Star will be the same thing too. So you have a small candlestick here, a lot of indecision in the market, and eventually price goes back up in your favor. That's kind of how it works. So these are good setups. You can pick a few of these, focus on them when you see price hit these levels in the chart. So while we go back to our chart here, see if we can spot anything when this happens. We are looking for price to hit a level, in this case here, resistance area. I'm going to go on the 1 hour chart for this, in this case. I just happen to have, in this case, an indicator on my chart, which is custom coded, that gives me these engulfing candles in the chart, so I can spot them more easily. I don't really care about the Morning Star, the doji, the small indecision candlestick too much, but I care about the engulfing candles in my own style of trading, so I've got them on my charts directly. And I'm looking at where price here hits a resistance area. We are looking to go short, so we're looking to sell with these engulfing candles in the chart. So we have a few of them, and some trades won't be good trades, and some trades will just be break even. For example, you might go and short here below, might put your stop loss above. Then when you see price like doing nothing or staying in between, you might get the trade closed out early, or you are actually getting stepped out. But a few of these can definitely be taken if you're going to have the bigger trade eventually that will get you in profit by far. This is the kind of thing where you want to make sure you have some confluence there, so you need to be near the level, and you need to have a strong enough candlestick. It cannot just be in a candle, and actually we'll talk about this a little bit later, but you need to go below the low. So whenever I take an engulfing candle trade like this, I will place my entry below the low. Okay, so here if I have this engulfing candle right there, this candlestick over here, okay, we have the red triangle on the chart. I want to make sure I enter the market below the low of the engulfing candles. So if we don't continue in the next candlestick, in this case we have another candlestick going up in the opposite direction, then I don't want to take the trade. I want to be away from this. So I have my order just below low. If it's not triggered, next candlestick, I'll just cancel it and just move on for the next trade. Okay. Same thing here. We might go short below the low. Price doesn't trigger that. It goes right back up. Therefore, we cancel the order. Here, we went below a little bit. That's a good trade. Stop loss above the high of the engulfing candle. And that's when we can start to use our trade management to actually play out this trade. Okay, we have price go back and retest again that level right over here, which is also important because this is a double top. So we have the same top here. Probably didn't get stopped out on this. We are still holding the trade, but we are able to either get back in here if we have to, or just mark this as a double top. So it touches this top 2 times, which is reliable. It's usually going to lead to bigger moves in the market. And in fact, if we let this play out, then it ended up being a pretty good trade. But you don't want to take some profit fast on this because it's very possible that price will just bounce off this level and not actually continue. So taking a 1-to-1 profit first, okay, so 1-to-1 will actually be much more beneficial than just waiting it out and trying to hold the trade for like a next level. I know that this in the past, people always say, okay, if you go in on a trade like this, you should wait and actually hold it for the next support, hold it all the way to here. It's very nice in theory, but in practice, it doesn't work because you don't want to hold the trade all that far. And price could just kind of bounce many times, not go there at all. It could get stopped out many times, and it just doesn't do anything else for you. I prefer these smaller trades that you hold for 1-to-1 and have a second target, maybe at 2 or 3-to-1. Then if you have to get back in again, get back in again. Doesn't matter. In this case, we could easily have gotten this move initially, whereas this is a more than 3-to-1 in that case. So 3-to-1, we could have easily gotten this. Then, okay, maybe we get stopped out. Maybe we get out at 3-to-1. Maybe we have part of it that stays and we get stopped out at break even. So we lose nothing on this. Then we move forward, take another trade after. And this trade also continues to 1 or 2 or 3 to 1. And that's kind of how it works. When price went to that support on USD CAD 1 hour chart, we had the same thing happen. Price bounced off a few times. As you can see, we have a couple of green triangles in the chart, which are bullish engulfing candles. Price went back up. Here we have a setup again. Price kind of stayed there for a little bit of time. Eventually came back down a little bit. Now we could re-enter on this. We could have at least a 1 to 1 or 2 to 1 over here. Then price went back down, then came back up. So you got to be willing to not wait for that perfect trade that will give you a 5 or 10 to 1. And you got to be able to catch the smaller moves. If you catch many of them, it works out pretty well. After a few losses or if you break even trade, you have this one here that is actually a very good trade. Or if you put your stop loss here below the low, you're able to capture a good move on this, right? So this is we'll get the 2 to 1 on this, 3 to 1 easily with even a big stop loss all the way to the other low over here. So that's kind of what we're looking for. We're looking for these trades that will pay out eventually. Even if you have to take a lot of them that have small targets or end up at break even, we can have these that actually pop up once in a while and give us a really good reward to risk. Okay, that's how you pay for your losses and your bills and everything around. So when it comes to trading reversal, right, we talk about we want to have a seller's market. We want to take profit partial at 1 to 1 if we can. So we have a first take profit that will capture a move faster. Then we can actually let the other take profit run for maybe a 3 to 1 or 2 to 1, depending what you like. I like 2 to 1 more than 3 to 1, but 3 to 1 usually pay more. It's up to you. That's the first thing here. Then we want to make sure that we are actually entering below or above the wick. All right, so if you have an engulfing candle that makes a wick, like this one here, this is a bullish engulfing candle. So it'll be here black or red. We want to make sure we enter here below the low on the next candlestick. So if it goes down more, then we are triggered. But if it doesn't do this and it only goes back up without breaking the low, then we don't want to take that trade. That's the idea here. We want to make sure we have some confluence, price moves in our favor quickly. And if it does that, then we get the good trade. In a few minutes, I'll give you a few more tips here in my extra. So stay tuned for this one. We'll go a bit more in depth on that and kind of add some more confluence there. But this is how you trade reversals for now. Okay, and you combine this, of course, with these candlestick patterns. Okay, next we'll talk about pullbacks. One thing that's very important when you trade pullback is the strength of the trend. So I'm putting these out of a 1 to 3. This is my scale. You can have whatever scale you want. Some people have like fancy names for these. I just have my own scale and I kind of go with it. That's how I like it. So a trend number 1 will be something like this. We have price go up, but like very slowly. Okay, it's kind of going up, but it's not very strong. Or it could even be like this, like it's going up, but it's going up, but like not very fast, right? Then we have number 2. Number 2 will be we have a trend that's going up, and it's pretty consistent, right? It's going up and it's going very well. It's going up quite well. It could be even like between these channels if you want to. So price going up at a pretty steep angle, right? It's going up continually. Then we have number 3. Number 3 is somewhere between number 2 and something in Bitcoin, right? So here if you can put Bitcoin or crypto, that'll give you a good idea here. Okay, so we have Bitcoin or crypto. So price goes up, but like very fast. And that's it's almost kind of shocking, right? Get to a point where the price is like way too extended for what it's supposed to be like. Now, this is a really good example with cryptocurrencies where price go up and up so fast. Eventually, it might come down, it might crash really quickly too. This is a kind of trend number 3. So it's like more aggressive, right? So compare these 3 types of trends here. I don't have a fancy name for them. This is what I like to use, what I like to think about. But you'll see on the chart, and I think it's easier to see than to try to name everything that we see out there. It's just easier to see it, understand it, then focus on what we have in the market. Now, what I do is I have a few tools for these kind of trends. So if it's number 1 or number 2, we can actually use moving averages, right? A pullback to a moving average, so pullback. If it's number 3, it's kind of hard to do that because we have price go up so quick, it's never going to go back to a moving average. So you have to be a lot more aggressive on this one. Now, this is not fully price action. I understand moving averages. It's an indicator. People will say, oh, it's lagging. It's not going to work. It's working really well. The key here is you want to pick your moving average based on the type of trend. So if it's number 1, maybe you look for a 50 EMA. So 50 period, right? This could be a good place to look for a pullback on that moving average. If it's a more ongoing trend like a number 2 here, then maybe you can look at a 20 EMA. Okay, 20 EMA. I'm a big fan of the all moving average. So all moving average, which is a bit more kind of getting close to the price. I like to use the 50 in most cases. 20 is good for a bit of a stronger trend too, or 21 sometimes. And then what I do is when it's aggressive, like here Bitcoin, very sharp, then I don't use the moving averages. I just go with price action. I look for pullback, I get in. My stop loss will be a lot lower, so I might, let's say, put an entry somewhere around here. And then I put my stop loss here, so I'm a lot more kind of forgiving. So I know price will stay in that trend. It will not go back all the way to here. It will stay somewhere in between. So I have some room here for the price to go down against me, but I want to be kind of building the trade over time. So as you go forward, you add some more here, you add some more here, maybe you add a little bit here, and then you kind of go like this. And if price continues to trend even higher, then you have all these trades here that get in profit over time and give you a really good reward to risk. That's the key here. Now, some people want to use only price action. They will prefer to use Fibonacci. Fibonacci retracement are also a good tool to do that. Fibonacci retracements, these are you basically extend from the low of your trend from here all the way to here, for example. You don't see, of course, this in the future. You don't see what's on this side. And then you extend from here to here. Then you get your levels. So you have the 50 level, you have the 61.8, you might have the 38 something. Depending on the trend, price will pull back to these levels and give you a nice entry, right? The key is that if we have a slow trend, maybe the 50 retracement is more reliable, right? The 50 is the 50%. If you have a even bigger trend, maybe the 61.8% is even better. If you have a more aggressive trend like this one, maybe it's the 38%. And Bitcoin, of course, will be different. It'll be hard to catch these Fibonacci pullback on Bitcoin or cryptocurrencies like big trends like this, but we could still do it the more aggressive way. So that's a quick overview here. Really, the key is whatever level you want to use, you should be defining them first. You should not jump into the market and have random levels you look at. It should be clearly always the same levels based on the type of trend you look at. So here we're going to have a look at the S&P 500 on this particular chart. Forward chart here, where we are at, and we're going to rank this type of trend first. What number is it? Is it a 1? Is it a 2? Is it a 3? I'll say this is about a 2 over here. It's not like completely up so quick, but it's not at the same time completely like going super like slow. It's not like this. It's actually more like this, all right? And it's not either at the same time going like this. So we're pretty good on this, right? That's kind of how it works. Okay, so based on this, what could we use as a tool of price action for any kind of trade ideas? By the way, what you want to do at the same time is use these patterns we talked about before. These ones over here, you want to look at the continuation patterns. Okay, so this one here for bullish and this one here for bearish. These are good setup that we can look at for getting into those trades. You can also just use engulfings. These also work well. Okay, so engulfing candles, bullish and bearish. These work also well for this. And of course, this evening star, you have less of them. When it comes to reversals, this is like a little bit less. But these engulfings work well for any kind of scenario, or use the continuation setups for these continuation trades, these pullback trades. So what can we do here? Well, we can have a first method, which is using a 50 EMA, so a 50 period moving average, which will go up like this somewhere, and we'll use this for a bounce. So here we have a bounce. Let's put this in our chart actually first. So this is a moving average exponential. It's going to show up on the chart here. Just going to have to adjust the settings first. Okay, so 50 EMA, I'm going back here a little bit in time. Look at how good this is on the chart, right? We bounce a few times, or price actually bounces off this moving average, like we bounce over here, right there. Then price bounces here again, right over here. And price comes even more, bounces again here. These are good entries, right? So I told you it's a trend of category 2, not too strong, not too slow. So we have a lot of these bounces. Of course, eventually it's going to go back the other way maybe. But as long as we can add these trades, calculate the risk well, we have a lot of ways to enter the market. So combine this engulfing candle here, which is not a big one. This one is quite small. But this combined with the pullback on the 50 EMA gives us a really good kind of strategy. So you would enter the market just above the high of your engulfing candle, put your stop loss below the low. You could also put it to somewhere here. Then you target a 1-to-1 for your first target again. 1-to-1 is over here. Then price here maybe steps you out a little bit, goes back against you more, because the trend changed a little bit. That's okay too. Then you have a chance to re-enter. Here we kind of went a bit deep. This is a big engulfing candle here. I will not enter this because we have a big stop loss when you have to enter this market. So I will wait for the next setup happening here. We have one that's just bouncing off over here, not too far. We might go in and take another trade above the high. Stop loss here below the low. We have the continuation. Make sure we go above the high, the engulfing candle. Stop loss. Our target here will be a 1-to-1, which is over here, easily achievable. We have a 2-to-1 or even like a 3-to-1. Always just look at trading, kind of stop loss, or we move our stop loss over time in your favor. I'll do a 3-to-1 here. I like 3-to-1. It's easy to understand. And boom, that's easily achievable. This is 2.9. This is 3. Okay, then we continue on. Then we have price goes back down. Doesn't quite, it touches the moving average, but without any kind of big reversal signal. So we'll just avoid this here. And here we have a bunch of tweezers. You can see these candlesticks with big wicks. Price makes us an engulfing candle. We go back in above the high, stop loss below the low. And then we kind of target, again, a 1-to-1 and 3-to-1. So 1-to-1 is over here. Okay, easily achievable. And 3-to-1, it's going to be a bit more far, but achievable too. Okay, somewhere over here. We'll never get out of the market at the optimal level all the time. It's going to be getting us out at a good take profit, a good level, but without kind of capturing everything. And that's part of life as a trader. It's just normal. But if you do this long enough, you have a lot of trades that accumulate over time, giving you a really good average reward on this. Right, my coffee is getting cold here. So when it comes to pullbacks, what we use, you have the strength of the trend, very important, 1, 2, 3. Then we have these price action candlestick patterns. So the same as before. Okay, this one also goes here for the pullbacks. I'm a big fan of engulfing candles, but you can use something else if you want to. It's up to you to choose what you like, what makes sense to you. Candlestick patterns are very good. Then we combine this with, of course, our take profit that are partial. So we said this before. It's going to see here. Take profit, partial. I like 1-to-1 a lot. And I like 2-to-1. For me, and trends work well. You can also do like a trailing stop if you want to. You have a lot of ways to do this, depending on what you like better, depending on your personality too. But that's kind of how it goes. And if you want to use, of course, fib, like we said, you can use fib, or you can use moving averages as pullback areas. These work really well too. Okay, then we get to breakouts. And this is when it gets really interesting, because I've done a video last week about trading breakouts with a bit of an indicator. So it kind of adds more confidence. I found it's a bit better. If you want to see how to trade breakouts, I'll put a video here in the corner. You can check it out. It uses one indicator. It's very simple. Using it the opposite way most people use it. So it's actually a good thing. I think you're getting a lot of edge out of this. If you want to learn how to trade breakout, go watch a video in the corner. It's a really good one. I went through all the steps, all the ways to know about breakout and avoiding fake outs in that one. So go watch it if you want. I thought about covering it here a little bit, but I want to go and actually you should watch the other video. Go have a look at it. It's called Mastering Breakout Trading, My Proven Strategies and Secret Tips. This goes to the whole methodology behind it. You can, of course, watch it, get a lot of details about this. And that should be a better introduction to breakout than what I'll talk about here. The price action is also talked about in this video. You can also learn it directly there. But if you want any more videos on this, let me know in the comment section below. Let me know your thoughts. I might do a video on trading Bitcoin too if you want. Let me know in the comment section below what you want to see on this channel. I'll do it for sure, I guarantee. I just need to know your thoughts, and I want to make sure people will actually watch it and use that info I share here on YouTube for free. Okay, now here are a couple of extra tips for trading more accurately price action. A few things you can start to master. First thing is look at the market context. I've said this so many times and I'll say it again. The context is always more valuable or more important than the trade setup. What this means is you can have a good setup, a nice single thing candle in your favor, you take the trade, boom, you get in. But then if the context is not in the right alignment, it's not worth taking. You're just gonna have a losing trade probably. So the context matters more. Look at Bitcoin, it's going up. Very strong trend, you could just buy anytime you want, it will go up eventually. So you don't need to worry too much about the setup if your context is right. It's really important to think about it that way. Second, I think it's very crucial for people to understand that whenever they take trades, it should go in their favor quite quickly. Like, don't wait for the trade to unfold, or don't let it run like until it goes sideways for a while, doesn't do anything. You don't have to hold a trade that goes sideways. It should go in your favor quickly. So that's why one of our rules is I want to make sure that price actually goes above the high or below the low the candlestick I enter the trade on. So if it's being off the candle I set up here, so we have an engulfing candle. This is like a bearish candlestick here. And then boom, okay, price goes up. I want to make sure I enter here. If it doesn't go here next candlestick, if price starts to go and be wobbly and not go in my favor on the next one, this is a bearish one, then I'll just skip the trade. I don't want to be in that trade. Right? If it goes in my favor directly, I know it's going to work out probably. I have much more better odds that the trade will work out if it goes in my favor right away. Okay, third tip here is take screenshots. And what this means is whenever you take a trade, take a screenshot of your chart. Go have a look at what price does when you enter a trade. Whenever you go long, take a screenshot of this, then what does price do after? When does it stop trending? Like what happens when we get out of the trade? What happens after we get out of the trade? What happens that make price reverse? We have this big candlestick here. Here we have this big engulfing candle that goes against us. I might take a note of that to see that, okay, when price does this, we want to get out, for example. But if you want to study the chart, the more charts we see, the better we get used to the patterns and the more we can spot them easily. And that makes a big difference in our results. So take screenshots, study the price, study how big the candlestick was when you took a trade, what the candlestick looked like. Was it a strong engulfing, a weak engulfing? Was it like in the right context, on the right level? What happened there? Study your losses too. It's very important to go through these trades, understand them better, learn them better. This gives you a big edge that most people don't have. Most people never journal, and those who journal never look at their trades again after. So if you can do these two things, journal and look at your trades after, you have a good advantage on most people who trade per section out there in the market. If you have a question on this, let me know in the comment section below. As always, I want to hear your thoughts. Did you like this video today? Give it a thumbs up. It will mean a lot. Make sure you subscribe if it's not done yet. I went overboard with this. Took a lot of time to prepare and to actually record. But if you like it, I want to hear your thoughts as always. If you don't like it, let me know how to make it better next time. And I'll catch you back here in the next video pretty soon. Ciao.